Hey everyone, welcome back to Corporate Decoder, the place where we unravel the complex language of corporate filings. And today we might just find out if Spirit AeroSystems is ready for takeoff or facing some turbulence. So we are looking at an 8K filing from Spirit AeroSystems Holdings Incorporated, which is basically a company's way of telling the public about important things happening right now. Think of it as a news alert for investors. This report is dated the 31st of October 2025, and it is about some important financial results they are releasing for the 9-month period that ended in October 2025. The main story here is about the company's financial performance. They issued a press release to share their results, and that press release is what this report is all about. Spirit AeroSystems Holdings Incorporated, or SPIA as you might see it on the stock market, is reporting its financial health. They are letting everyone know how they did financially for the first 9 months of 2025. We are getting a peek at this through a press release they put out. Now, the filing itself is quite standard, mostly formalities, but the real juice, the financial story, is in that press release they've attached. Since we are focused on the numbers and what they mean, let's dive into what Spirit AeroSystems is telling us about their business. It is important to note that this information, while important, is being furnished and not officially filed in a way that makes the company liable under certain sections of the law. This is common for press releases attached to parched to 8Ks, but it doesn't diminish the importance of the financial information itself. Now let's talk strategy and the big picture. Spirit AeroSystems is a crucial player in the aerospace industry. They build aerostructures for commercial, military, and business jets. Think of them as a major supplier for companies like Boeing and Airbus. Their success directly impacts the ability of these giants to produce planes. So, when Spirit AeroSystems reports its numbers, it's a big deal not just for them, but for the entire aviation ecosystem. They've had a bit of a rocky road in recent years, facing production challenges and quality issues, so investors will be closely watching to see if they are on a path to recovery and consistent growth. What we are looking for in these reports is a clear picture of their financial health. Are they making money? Are their costs under control? And are they positioned well for the future? This isn't about reading every single number, but identifying the trends and the key indicators that tell us where the company is headed. Are they selling more planes parts? Are their profit margins improving? Are they taking on too much debt? These are the questions we aim to answer. Let's imagine we are looking at the actual financial tables within that press release attached as Exhibit 99.1. While we don't have the full detailed tables here, the summary information tells us the company announced its financial results for the 9-month period ending the 2nd of October 2025. This means we are getting a snapshot of their performance for most of this year. If we were to see those detailed tables, we would be looking for a few key things. First, revenue, that is the total amount of money they brought in from selling their products. A rising revenue generally means they are selling more, which is good. We would also look at their cost of revenue, which is how much it costs them to produce those products. The difference between revenue and cost of revenue is their gross profit, and a healthy growing gross profit margin is a very positive sign. Then Therese operating income, which takes into account their selling, general, and administrative expenses. This shows us how profitable their core operations are. And finally, net income, often called the bottom line, which is what is left after all expenses, including taxes and interest, are paid. A consistent increase in net income is the ultimate goal for any publicly traded company. Let's say, hypothetically, that their revenue for this 9-month period saw a modest increase compared to the same period last year. That would suggest they are winning more orders or getting more business from their main customers. But then if we saw that their cost of producing these parts has gone up even faster, their profit margins could be shrinking. That is a warning sign. For instance, if revenue grew by 5% but their costs grew by 10%, that's a real squeeze on their profitability. We would also scrutinize their balance sheet if it were available. Here we look for things like their cash on hand, how much debt they owe, and how much they are owed by others. A company with a lot of debt might be seen as riskier, especially if their profits aren't growing fast enough to easily pay it back. Looking at the bigger picture for Spirit AeroSystems, they are in an industry that is cyclical. Demand for airplanes goes up and down with the global economy. Right now, the aerospace industry is seeing strong demand as travel recovers post-pandemic. This presents a significant opportunity for Spirit AeroSystems. However, they also face intense competition and the constant challenge of maintaining high-quality standards under pressure to produce more. The fact that the focus of this filing is the press release as Exhibit 99.1 tells us the company wants to highlight its recent financial announcements. It's their way of sharing the good news or perhaps the less than stellar news directly with the public. Without the specific numbers from that press release, we can only infer the general direction. But based on industry trends, We'd hope to see signs of improved production efficiency and potentially a stronger backlog of orders. Given that this is an SEC filing, the information presented is meant to be factual and transparent. However, companies always try to put their best foot forward in their public statements. Our job at Corporate Decoder is to cut through the jargon and the potential spin to understand the underlying health and direction of the business. So what is my take on Spirit AeroSystems based on what we can glean from this filing structure? If the press release they put out shows healthy revenue growth, and more importantly, improving profit margins, that would signal a company on the mend and capitalizing on industry tailwinds. However, if the numbers indicate rising costs or stagnant profitability despite higher sales, it could signal persistent operational challenges. The aerospace sector is unforgiving, and consistent execution is key. A significant risk for Spirit AeroSystems, and indeed the entire supply chain, remains the ability to scale production reliably while ensuring quality. Any recurring issues could lead to contract penalties or loss of business from major customers like Boeing. On the opportunity side, the continued global demand for new aircraft presents a substantial growth runway, provided they can meet that demand effectively. In conclusion, this 8K filing, by referencing a press release, is a signal from Spirit AeroSystems about its recent financial performance. The real story lies within that press release, and we would need to see those specific figures to give a definitive assessment, but the context of the aerospace industry suggests it is a critical time for the company to demonstrate strong operational and financial recovery. Alright, that is our decoder on this Spirit AeroSystems filing. What are your thoughts on the company's position and the current state of the aerospace industry? Let us know in the comments below. If you found this breakdown helpful, hit that like button to support our work and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.